Hello everyone, and welcome back to the channel. Every quarter, the 13F filings give us a look at what the greatest minds in finance and the legendary investors are actually doing with their money. A lot of these filings for this quarter became available today, a couple of hours ago, and I'm going to reveal the major moves of 5 legendary investors that I personally like them and follow their moves. I'm talking about Warren Buffett, Bill Ackman, Chuck Akre, Josh Tarasoff, and Chris Hohn. These aren't rumors, these are the official 13F filings for the third quarter of 2025, and let me tell you, there are some bombshells. Today I'm going to use YaraIQ Legendary Investor Tracker to show you the recent moves and graphical representation of the portfolio of these legendary investors after their recent moves. Get ready to see who's trimming their winners and who's betting big on the new ideas. I start with Oracle of Omaha, Warren Buffett, and Berkshire Hathaway, of course. It's probably not Warren Buffett himself anymore that is buying these stocks, as he's basically retired. But Greg Abel will follow the same playbook of value investing and buying with a margin of safety that Warren Buffett used at Berkshire for decades. Berkshire Hathaway has been trimming 2 of their largest, most well-known positions. First, they cut their massive stake in Apple by nearly 15%. This is a significant trim from the company's largest position. Is Berkshire signaling caution on Apple's valuation, or is it just a smart profit taking after the historical run of the company? I believe it's both. Apple, in my opinion, is the most overvalued Magnificent 7 stock, and I showed this before in my Max 7 valuation video. I think this is actually a wise move by Berkshire Hathaway. Berkshire also slightly reduced their position in Bank of America by about 6%. While this is still a core holding for Berkshire, it shows a minor reduction in their banking exposure. But the Oracle wasn't just selling, he was also adding and in one case making a big surprise. Berkshire added to the positions in the insurance giant Chubb and the pizza powerhouse Domino Pizza. He also increased his small stake in SiriusXM. But the biggest news, a brand new position, a 1.62% stake in Alphabet or Google. This new bet on Google is a rare, surprising, and historical move to buy a new mega cap tech name for the typically tech skeptical Warren Buffett. I guess that's probably more of a Greg Abel move. But anyway, it shows Berkshire sees value in the Google. And that is fantastic. Google is my largest holding, and I'm definitely happy to see that Berkshire Hathaway is now started a relatively large position in Google as well. If we look at Berkshire Hathaway portfolio, Apple is still the largest holding with 22% weighting, followed by American Express, Bank of America, and Coca-Cola. All solid businesses with significant moats. I'm really interested to see what Berkshire will do with their Google shares in the next 13F filing, especially after the recent surge in the share price of Google. Next, let's dive into 2 portfolio managers known for their high conviction, concentrated strategies. Chuck Akre and Josh Tarasoff. Let me start with Chuck Akre at Akre Capital Management, as he and his associates made some truly eye-popping shifts, signaling a sharp turn in their focus. Akre Capital dramatically cut their position in major holdings, Danaher by over 50% and American Towers by over 51%. And also they reduced their Roper Technologies by nearly 20%. These were multi-baggers for Akre, so the sales are major profit realizations, and it means Akre Capital Management do not really believe in especially American Tower business model anymore, because they talked about this business a lot in the past. So I think they see a big shift in the business model and the moat of the company. Where did that capital go? Into huge increases in 3 names. A significant 2,750% increase in FICO, a 253% bump in Copart, and a 10% increase in CoStar Group. This is a clear move into businesses with strong network effects and unique pricing power. In particular, buying more Copart is really interesting to me, as this is the same stock that I'm also actively buying right now. To see Chuck Akre and his team also making the same decision is really interesting for me. Chuck Akre investing philosophy is based on three-legged stool approach. He focuses on extraordinary businesses, talented management teams, and businesses with long runway for reinvesting capital. When I look at Chuck Akre portfolio, I see great stocks and amazing businesses. His top position is MasterCard at almost 18% weighting, followed by Brookfield Corporation with 13% weighting, and then KKR, which is another asset manager like Brookfield, Visa, and Moody's. All of them are extremely high quality businesses with solid management teams. I really like Chuck Akre portfolio and also his investing philosophy. Next, we have Josh Tarasoff of Greenlee Lane Capital, which gives us an interesting trades. So last quarter, he sold 100% of his Brookfield Corporation and bought into Brookfield Asset Management. This quarter, he sold 100% of his stake in Brookfield Asset Management and bought a larger stake in Brookfield Corporation again. He basically traded BAM and BN based on the valuation gap multiple times in the past couple of years. Tarasoff also reduced his position in Burford Capital by over 45%. If we look at his current portfolio, Amazon is his largest holding with 20% weighting, followed by Brookfield Corporation with 19% weighting, and then Berkshire Hathaway, Markel Group, Tesla, and also some Google. I think he has a really solid and concentrated portfolio, and I personally shared 3 stocks with him: Google, Amazon, and Brookfield Corporation. Okay, now let's look at 2 high-profile activist investors, Bill Ackman and Chris Hohn. Let's start with Bill Ackman. Bill Ackman at Pershing Square Capital reduced his position in Alphabet by almost 10%. He also made minor trims to Uber, Brookfield Corp, and Restaurant Brands International. The Alphabet reduction suggests he's taking some profits off the table after the strong year for the stock. I guess he had some redemptions in his fund in this quarter, so he had to raise some capital and therefore forced to sell some of his stocks to raise fund. When we look at Ackman's portfolio, we see concentrated bets on Uber and Brookfield at almost 20% each. These 2 stocks are significant bets that Ackman made in the past quarters, and so far, both of them were really successful bets for him. 2 bets that I don't really understand are Restaurant Brands International and Chipotle. So Restaurant Brands International has 4 strong brands under its umbrella. It has Tim Hortons, Burger King, Popeyes, and Firesop. Basically, these businesses, they mostly lack growth story. Chipotle and Restaurant Brands International were among the unsuccessful bets of Ackman in the last year, but I think he's still up huge on both positions. Overall, I think while Ackman is a controversial character, and I don't understand some of his investment thesis on stocks like Restaurant Brands International or Chipotle, his investment bets are working very well for him, and I'm curious to see what the next couple of quarters will bring for him and his portfolio. Finally, let's look at Chris Hohn, who showed interesting yet conflicting with other legendary investors moves in the tech space. His moves were dramatic. So Chris Hohn slashed his holding in the Google, the Class B shares, GOOG, by over 41%. And he also sold 100% of his Google GOOGL position entirely. So this clash, Buffett buying Alphabet, Ackman trimming it, and Chris Hohn selling out entirely, highlights the deep valuation and growth debates surrounding this mega cap tech sector right now. We will see who made the best decision in the next couple of quarters, but at the end of the day, all of them are making profits and make money. So trimming a position doesn't mean there is something wrong with the stock fundamentals. It is just meaning that specific super investor has better ideas for investing his money. Chris Hohn also showed major confidence in another key payment processor, Visa, adding a massive 47% to that position. He also trimmed his stake in Canadian National Railway and a smaller amounts of Canadian Pacific and also Microsoft. He continuously trimming his Canadian Railway stocks, particularly Canadian National. I recently analyzed Canadian national stock and I also came to the same conclusion that while it is a stable business, the stock has a lot of headwinds, particularly due to inefficient capital allocation. Hohn is really focused on pricing power and high barriers to entry when choosing his stocks, and his portfolio clearly demonstrates this approach. His top position is General Electric at 27% weighting, followed by Visa, Microsoft, Moody's, S&P Global, Canadian Pacific Railway, and Google. All of these companies have significant pricing power. I think Chris Hohn portfolio is really strong all around. So what's the big takeaway from the Q3 13F filings? I think profit taking in big winners is something we see across the board. Buffett, Akre, and Hohn all trimmed huge positions like Apple, Danaher, and Alphabet. The key difference is where they reallocating the capital. Buffett is quietly diversifying with new small bets in sectors like insurance and a surprise entry into Google. Akre is making a high conviction pivot into businesses with powerful monopolies like FICO and Copart. And Chris Hohn is shifting his tech conviction from Alphabet to the payment network of Visa. These filings don't tell us what's next, but they give us some roadmap of what these legendary investors have already done. So which of these moves surprised you the most? Are you following any of these plays? Let me know in the comment section below. If you like to see these portfolios in detail, you can join my Patreon and access YaraIQ software in the link in the description box below. Thanks for watching, and I hope to see you guys in the next video. Farewell.